All right, guys, we're going to get into this video very quickly. I'm still setting up, making sure that nobody else gets this information except my members, because this is a members only video. Sure that nobody else. Here we go. Yeah. So I'm live here, and we're going to go right. I'm going to share my screen because we're going to do basically a wealth fund breakdown. This is the entity I want you guys to actually use when you're investing in your index and ETF funds, because if you guys consolidate all of your investments inside of Robinhood and or Acorns or M1 Finance, you're going to more likely be eager to sell off some of your investments. And so having it apart from all your other investments will encourage you to put things on a monthly allotment and not touch it. And this is the reason why I'm giving you this information. And you notice the information I give you guys has been members, have been Patreons of my channel. I don't give to anybody else. And if I do, it's probably like 6 months later, but you guys can get the information first. But most likely I don't give out the same information. And this is one of the perks that you guys get, because you're gonna start to invest like I invest. And then next thing you know, 5-10 years later, you're like, man, I didn't know I had all that much money in there. But anyway, let's first go over, we're going to break down, we're going to use Nerd Wallet as a teaching entity for we can have better understanding of what I'm talking about. And then even so much, what do Wealthfront actually invest in? Okay. So with that being said here, this is updated for 2021. They get a 5-star rating. Okay. Now, first and foremost, the management fee for them to operate your portfolio is 0.25%. It's not a lot, but with my link in the description of this video, you will get that $5,000 promotion, meaning all the money that you'll be depositing inside of Wealthfront, they will manage it for absolutely free. So it doesn't cost you anything up until $5,000, which is a great thing. Then once you reach $5,000, they will every month take 0.25% away from your earnings, which again is not a lot for a hands-off investor. And I'm gonna break down all the things that they do for you automatically that you don't have to worry about. So here we go. Pros and cons, again, with my link in the description of this video, you guys can get your first $5,000 managed for free. Then you also have the low ETF expense ratios. We talked about this morning. So any of you guys who haven't seen my video that I released here on March 19, 2021 about ETF and index funds, that it should be a great portion of your portfolio, either 25%, depending on your age, all the way up to 65 and 75% of your portfolios. Then you'll know exactly what I'm talking about the low ETF expense ratios. I broke that down as well. Then we also have daily tax loss harvesting. This is awesome. This actually helps you on saving the amount that most investors will use when it comes to investing. Okay, because anytime you guys are trading, buying or selling, you are incurring taxes, but Wealthfront does it at a level where it cuts down your taxes tremendously. Okay, and then it says automatic rebalancing. You know, a lot of times we do this manually, but what if you had an entity that does it for you? Like you'll hear me say, oh, I sold these stocks, but I bought these stocks. That's a matter of automatic rebalancing. And because you're essentially every month just putting money into Wealthfront, they are investing your money in different sectors, in different industries. So they have total control of how they invest in your money, but it's all for your gain, okay? All for their earnings, okay? And we're going to break down the different sectors, so don't worry about that, okay? This is a comparison to some other ones. I know you guys heard of Betterment. I used to be on Betterment pretty good, but I'm sticking with Nerd Wallet because all of these essentially have 5-star ratings. Now, Betterment, people like it because it has 0% of account minimum. What I like about Wealthfront, I love the fact that you have to put some skin in the game. So your first initial deposit have to be $500. And some of you may say, oh man, $500. Listen, I love the fact that it's going to get me right off the back to invest $500,000 because I'm already allocating a certain amount of money to start my investments. Now, for those of you who may want to start off at zero, then Betterment may be a better look for you. But I know a lot of you, especially during tax time, you should go ahead and open your account with $500 to $1,000 because this is for your future. This is not for your present. Okay, so let's move on. And then again, you have the promotions up to a year. Sophie is free. I don't really like Sophie. And again, I'm not trying to do a comparison video. I'm just giving you the tool and the platform that I use that I think that'll be best for you. It says here, Wealthfront is best for who? Hands-off investors, taxable accounts, okay? Free financial tools, even if you don't have a Wealthfront account. Then for you ladies and gentlemen who want to invest in your kids' future, they also have a 529 college savings plan management, okay? It goes into $500 for investment accounts, $1 for a cash account, $0 for financing. Then you have your account management fee. Your investments free ratio said ETF expense ratios average 0.08%. That's nothing. That's nothing. That's not going to cost you any money at all. I mean, it's going to cost you a little bit, but not as much as traditional accounts. It tells you about the portfolio mix, and this is very, very important so you understand the diversification that you have even within the Wealthfront platform, that they're not just investing your money in one account. It says here that you have ETFs from 11 asset classes. Portfolio generally consists of 6 to 8. That's wide diversity. So you're covering a wide number of sectors that your money is actually be investing. And when you do that, you lower your risk, you lower your volatility. So that way you're always earning some sort of cash. It goes into some other great details that's not pertinent at this particular time. Then here are the accounts supported. So either you guys want to do in individual accounts or joint non-retirement accounts. It also have your Roth accounts, your traditional, your rollover, and your SEP IRAs. That's your self-employment IRAs that also have trust, 529 college plans, then also high yield cash accounts with not charged management fees. Okay. That's in case you guys want to save through. You guys want to save through Wealthfront as well. Then the tax strategy, which I absolutely love. It has your daily tax loss harvesting, free for all taxable accounts. That is essentially added on to your account automatically through Wealthfront. Stock level loss harvesting with accounts over 100 grand. TurboTax customers can easily import tax law harvesting data from Wealthfront. Automatic rebalancing, free on all accounts. This is a robo investor, which cuts down the cost for you. And that's why I say human advisor option is none. It has a savings account. It has customer support through these particular ones. It says licensed product specialists have series 7 and 66. And if you look these up, basically these are high profile CPAs, okay, that knows what they're doing when it comes to taxes as well as investing, okay. It goes over where it shines. We're gonna jump down here though. We're gonna jump down. Talk about the Wealthfront free financial planning path tool for mobile and desktop. Helps people for planning to buy a house. All of these are good tools for you guys. I lost my way. Give me a second here, guys. Give me a second. I went too strong with this. Okay. Yeah, right here. Okay. So that's one of the perks as well. Then, if you guys been listening to me when I'm talking about cryptocurrencies and investing in Bitcoin, Ethereum, Stellar Lumens, Ripple, cryptocurrencies of that magnitude, listen to this. In addition to bank and investment accounts, you can link your Coinbase account to track your cryptocurrency holdings. There's a lot of linking of accounts when it comes to Wealthfront. It accumulates all your assets. It tracks it. It doesn't input where you can actually draw it from it, but it's tracking it to kind of give you your overall net worth. You see this? Your net worth today, your net worth at retirement. That's what that's saying, okay? Because it draws in all of your assets. Let's see what else is important here. You have your college savings. That's with your 529 college. If you guys want to set that up. And this is just a brief overview so you guys can go and see if Wealthfront works for you. And again, with the link in the description for Wealthfront, they will manage your account up to $5,000 totally free. So you don't pay anything, but you do have to initially deposit that $500, which is your money that you will be investing in these index funds. They have a high interest savings account. And then it talks about where Wealthfront falls short. And they talk about what? Risk Parity Fund. It says risk parity is a strategy for allocating capital across multiple assets type with the aim of giving your portfolio some added diversification. This is not a big deal, especially for guys who want hands-off robo investing. This is not a big deal for you, so we won't stay here. Then it asks if Wealthfront is right for you, and it talks about especially for customers with taxable accounts, which I am also a member of Wealthfront with a taxable account, so they handle all the tax harvesting for me. Key terms in this review: robo-advisor. Again, robo-advisor is known as an automated investment service online, and basically it's controlled by computer algorithms and advanced software to build and manage your investment portfolio. And it's much cheaper than an in-person, a human financial advisor. Again, they're just being supported by the platform. Fractional shares. This is the one thing that Wealthfront falls short, that fractional shares let investors purchase stock or other investment based on a dollar amount they select rather than the price of a whole share. This may be particularly advantageous for investors who are working with limited money but want to build a highly diversified portfolio. Wealthfront doesn't buy fractional shares of ETF, which may prevent the company from investing your entire deposit. This means there could be uninvested cash in your portfolio that isn't earning a return. So essentially, if you don't have enough money, say for you have $10 inside your available cash for Wealthfront, and say the sort of investment that they're investing in is $15, they're just going to wait for your next deposit and then invest all of that cash inside of it. So for most people, I tell, hey, if you can allocate $50 to $100, all of that money, most likely all of that money will be invested. So you're never just having available cash. Because again, you don't want available cash on hand. You want all of your money to be invested. Then this breaks down what it calls tax loss harvesting. Very important. It says tax loss harvesting is an investment strategy that can significantly reduce capital gain tax. In taxable accounts, the practice involves selling losing investments to offset the gains from winners. Basically, you're not paying taxes on investments that you're not making money from. Okay, we got it. Wealthfront offers daily loss harvesting on taxable accounts and also stock level tax loss harvesting, also called direct indexing, for portfolios over $100,000, making it worth a look for those with high balance taxable accounts. Wealthfront says stock level tax loss harvesting is an enhanced form of tax loss harvesting that looks for movements in individual stocks to harvest more losses and lower your taxes, even more than basic harvesting. Okay. It goes into expense ratio. We broke that down this morning. Then we need to cover automatic rebalancing. Very important. This thing jumps all the way up. It says automatic rebalancing is regular rebalancing of your portfolio in response to market fluctuations or other factors that shift your portfolio out of its intended investment allocation. The market moves, and over time, your allocation will move too. So if you target what's happening 60% in stocks and 40% in bonds, and stocks are doing well, you could end up having 70% in stocks, which may be more risk than you are comfortable with. But with automatic rebalancing, the computer monitors your allocation and will automatically adjust your investment if it gets out of line. I absolutely love automatic rebalancing because, again, when stocks are doing good, it allocates it and rebalances it towards stocks heavy and bonds low. If stocks are beginning more riskier, it'll automatically start to safeguard your money into bonds and less in stocks. So you don't have to do anything. This is phenomenal, and this is why I absolutely love Wealthfront. I've been using Wealthfront for the past 3 years, and I used to do plenty of videos on Wealthfront just to let you guys know. So this is a good way that you guys should be investing. Hands-off investing, set a monthly allotment, leave it alone, okay? Let's move on. And I love to do these questions that Google may have because I think that is a good tool to answer some of your questions. All right. Let's see here. How safe is Wealthfront? That's a good question. And quite frankly, like I would tell anyone else, that Wealthfront is a member of the Securities Investor Protection Corporation, the SIPC, and clients are protected up to a maximum of $500,000. It's good for beginners. It says, if you're on the fence about a robo-advisor, Wealthfront is a great place to test the waters with a small amount of money because it's free. This is also really great for beginners, investors, and students who simply don't have a lot to invest yet. So it's great for beginning investors. And here's another one, which I love Vanguard as well. But it says, Wealthfront has competitive advantages over Vanguard when it comes to minimum deposit. Vanguard robo-advisor requires you to have $50,000 at minimum, whereas Wealthfront just requires $500 of your initial investment. Okay. What else do we have to say here? I was going to show you one more thing. I think I lost my spot here. Give me 1 second. Yeah. So here we go. With this particular, I want to show you a couple of things. Okay. It says, how every day. Let me blow this up so you guys can see. Every day, our software works to lower your tax bill through various strategies, including tax loss harvesting. Okay. Reduce costs. We only charge one small 0.25% annual fee. Okay, not monthly. So I stand corrected. Annual fee, and choose low cost index funds so you keep more of your return. As I told you before, low cost index and ETF funds are the support, is the foundation of every great financial investment portfolio. Cannot stress this enough. It says here, we invest your money across a right mix of asset classes for your risk tolerance. To maintain this diversification, we automatically rebalance your portfolio, which we talked about previously. Okay. So let's break this down. We're not going to get into the S&P 500. I think there's a better application on here that we can look at. Stock picking is better if you prefer more thrill. Wealthfront is better if you prefer less headache. We buffer your against downturns and focus on steady return. Less work, we handle blah, 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 blah. Okay, we got it. You pick the right account for your goals. And then again, guys, if you want to invest in these particular entities, individual, joint and trust, and that's a general account, retirement account, you got the traditional Roth and SP IRA. If you were going to retirement because you want to invest in your retirement, go with Roth, please. Go with a Roth IRA. And then for you guys who want to invest in your children's future, then you have your 5 to 9 college plan that you can, again, your child 5, 10, 3 years of age, you can be allocating $50, $100, $200 towards their college. Okay. We build a diversified portfolio tailored to you. Global diversity. Let's look at something else. Yes, and this is easy. I have cashed out of some of my Wealthfront accounts, as you can tell right here, the liquidity of it. What else do I need to point out here? I want to show you the allocations here. Let's look at this. No, I don't want to log in. I thought they was going to give me a breakdown of the things. Here we go. All right. So currently my risk score is 8. I'm heavily invested because I'm still young. Okay. And look at the breakdown here. It invests 35% in US stocks, 24% in foreign stocks, 16% in emerging markets. And if you saw my video today, I also talked about emerging markets, which are currently majority of those emerging markets that are performing well is China, or located in China, those companies. Then it has dividend stocks, 8%, real estate 0, US government bonds 0, tips 0, and that is your inflated protection securities, treasury inflated protection securities, another form of bonds. Then you have your municipal bonds, okay, corporate bonds, and emerging market bonds. So let's click on this. Your municipal bond states here, and this is what I love, they give you definitions for everything, issued by the U.S. state and local government. These bonds are exempt. Listen to this. These bonds are exempt from federal income taxes, so you don't pay them for these particular bonds. They provide investors in high tax brackets a tax-efficient way to obtain income, low volatility, and diversification. Then, if you do your dividends. With a history of increasing their dividend payouts over time, tend to be large cap, well-run companies and less cyclical industries and thus less volatile. Then emerging markets, it kind of gives you some stocks over here. BWO, I actually went over this again today. That is a very, very popular one. Emerging market stocks offer additional diversification because these investments respond differently than foreign developed economies. Okay, then foreign stocks, it gets into that, give you some examples. Then U.S. stocks, give you some examples. If you notice, all of these overhead has been what? ETF and index funds. So let's look at this. ETF, ETF, ETF. All ETF here. ETFs again. We have ETFs all over the board or index. See, that's why I'm always talking about index and ETF on. Always, always, always. Okay. All right. Even if they would put a percentage in here. And again, this goes based off your risk score. So let's bring this down some. You see how it's changing? Let's go total risk score. It lowered the municipal bonds and increased in your US and your foreign stocks based upon your risk score. Let's say we want minimum risk, like 0.5. Look where it goes. US government bonds. These right here, and it says debt issued by the US federal government and agency. These bonds provide steady income, low volatility, and low correlation with stocks. 25% here, 4% here, municipal. So you pick your risk score and it allocates according to your risk. I love this because it's a no-brainer, right? You can look at it real time as you are associating how much you want to put in. So if I go here, it lowers it down to 4%, but I stay at an 8. Okay, I believe 8 is good enough for me. Okay, because 17% is no taxes. If I look right here, see that? Are exempt from federal income tax. That's what I like. So with that being said, ladies and gentlemen, that is the entity that I use. Wealthfront has been working well for me, and I don't allocate a lot of money. Again, you guys can allocate $50 to $100, $25, whatever you have. And this is one of those things you set it and forget it. Me personally, I would not be investing in ETF and index funds through Robinhood. I wouldn't do that. I want a total separate entity so I can have better track of it, especially with a platform with all the additional tools that you can see. I mean, once again, you're not going to get this level of clarity and transparency with Robinhood. And that's why I gave the information on Robinhood today, but this is the actual platform that I actually use. Okay. So there you have it. Learn money, be inspired. You guys have a great evening.